Welcome traders, sorry, big warm welcome. It is Sunday the 15th of October and I'm preparing this for the week commencing Monday the 16th of October. So the news that I'm really going to be focusing on this week will be, I want to see what's happening with the CPI out of the UK, in the Eurozone, which will give me a sense of what's happening with inflation and recessionary kind of fears. And also out of the US, I want to have this is already kicks off after Wednesday. I want to have a look at building permits. Are we seeing an increase or decrease in that? And initial jobless claims, are they going up? And then potentially manufacturing as well as that kind of dropping. So what's the story there? So that's really what I'll be focusing on this week. That being said, let's go and have a look at the charts. Okay, so the dollar index. So we've got a bit of a resistance level here. Let's call it 113.50. I think it's a little bit below that, but let's call it 113.50. And then we've got this bullish candle that built up on Friday. And so for the most part, this appears as though if it could break through this, it's just going to continue up to 114. So if we go and have a look at euro dollar, we've got a bit of a bearish candle setting up here, and it's going to attempt to push high. We can see over the last week with this bullish engulfing candle that there was an attempt for the market to produce a higher low, but it doesn't really count until we start to break above these levels here. So we need to see a structural change, and this little sort of dash line over here is the bear. Think of it as a line in the sand. It's more bearish momentum. As long as we stay below that line, we are generally more bearish. Once we start to breach that and maybe get above parity, then I would say we're likely to see a significant correction to the upside. And for the moment, that really appears to still, in other words, what appears to be the case now, and for the plan A for the week going ahead is the same as last week, expecting that dollar to continue to attempt to strengthen. We could see sterling as well trying to create a higher low there, but again, we need to start breaching certain levels before we can disregard them. I mean, what was interesting is we didn't really have an easy follow through on that dollar. We've got quite a bit of a rejection on that monthly candle. So there is a bit of a struggle going on, but that dollar, if it decides to move, it's just going to move everything else out. So therefore, plan A is a stronger dollar, expecting a stronger dollar, and then plan B is, okay, well, let's see if we get a shift for some reason. But there doesn't appear to be any reason like that I can see on the horizon, and the price action is not giving any clear clues. So there doesn't seem to me to be any reason to expect reasonably that there's a high probability it's going to change this week. We always get, we get the surprising sudden reaction from the market, but again, I'm not seeing much divergence. I'm just seeing a battle going on, price actions bobbing back and forth. And then we look at something like Aussie dollar, which is obviously very, very bearish. We see last week it just followed through on that. I'm still thinking it's relatively weak at the moment, so I expect it to continue to work its way down to the next major levels. Kiwi dollar will also likely follow through on that. Then we have a look at dollar yen. So what did change last week is that dollar yen continued big time, started to resume its trend to the upside. It's sort of been dripping, sort of what you would call it sort of drips and drabs, and now it started to pick up momentum to the upside and started to breach historical levels again, going back to all-time highs. And so, unless they intervene, the Bank of Japan, I'm not expecting any changes there. Dollar Swissy now starting to breach previous highs as well, and therefore, if it kind of starts to pass these highs, it's starting to head up towards 1.080 and possibly even as far as 1.02. So I'll keep an eye on those. Dollar CAD also looking relatively bullish. So quite a few of these have got that potential to continue heading up to the upside independently. Let's have a look at EURUSD. I'm going to skip the dollar ruble for now. There's nothing exciting about that. We've got this attempt to form an inverted head and shoulders, but it doesn't really trigger anything in me. I do think with that bullish divergence showing up, and a lot of this, I do think there's a high probability dollar Swissy, and I've been speaking about it for obviously a month or two now, is starting to push up, and I think it wants to work its way back up to parity. So I'd like to see how that ultimately unfolds. Looking at gold, so again, remember that if we get that dollar, that strong dollar, it's going to kick everything else out the way, which means it's going to hit commodities hard. We can see here gold starting to push back down towards those old lows. It's under the same kind of pressure as euro dollar, so just compare those two daily charts, very, very similar. And again, breaches of the highs and lows of the weekly candles are relatively significant. So gold, I beg your pardon, gold against the US dollar. And actually, one of the things I spoke about, I'm going to jump ahead a little, was with crude oil. Crude oil was looking relatively bullish within this monthly structure here. We've got a bullish candle here within the moving averages, and I was saying that if we finish bullish, then I expect this. The probabilities of this resuming the uptrend and heading back up is relatively high. However, there is one thing that can change that, and that's the dollar. So if we start to get that stronger dollar and it pushes back, we're going to see gold head lower, we're going to see crude oils head lower. Silver is already coming back down towards its lows. You can see that monthly candle looking relatively bearish as well. So again, we're approaching these levels, and right now it does look as though that dollar is just going to keep pushing. All right, so let's have a look to copper as well. Sorry, I'm jumping around a little bit now. But yeah, I'm just expecting that stronger dollar to keep pushing and pushing and pushing unless it counters that resistance again at that 113.50. So we'll see if that is the case. Then natural gas doing its own big swings. Definite resistance up here. It keeps getting knocked back, but also keeps producing these higher lows. It's come back into these old highs here. So I'm curious to see what's going to happen with that. Brent crude and UK crude and US oil are, and US crude, I beg your pardon, are basically kind of very highly correlated at the moment. So I'm just going to focus on the West Texas crude oil. That's really where I'm looking to see what the signals are. Not, we've got crude oil inventories this week, but I'm just going with what the charts are telling me. I'm not expecting any big changes there. Sugar finding a nice little bit of support within this range, looking bullish right now. I expect it to come back up towards 1920 and just keep testing that level. Coffee is starting to break through these lows, so that's coming under pressure as well. That's also looking as though that's going to come back and test these recent lows. Then we've got wheat. Wheat starting to come under pressure as well, pushing a little bit lower. So although it did find support, it hasn't. Yeah, it did just breach the higher bit. It hasn't really followed through, so we're between the highs of September and the lows of August, and so I want to see what happens with that. It's a tricky one to predict, but it looks like it's going to be pushed a bit lower. Cotton as well coming back down to these levels of support, and so again, it's sitting between the highs and the lows. I need to see it breach either side to be able to kind of see which way it's ultimately going to go. Then we look at the global indices. So the concern I have here is that the global indices are just unable to get past these levels of resistance. You can see both of the last weekly candles are showing signs of exhaustion. They're not necessarily bearish, but they are showing signs of exhaustion. And in situations like this, doesn't matter what the time frame is, we often get what's called a momentum candle, which will be either a big move to the upside or to the downside. And in situations like this, it often can be bearish. It's because it's struggling to the upside, it could break to the downside. So this is a range. We're range bound at the moment, and if we break out to the upside, then obviously it makes more sense. We're going to head up towards, say, 32,000. And if we break below the low, I think we're likely to see a bit of panic in the markets and see the markets head a little bit low. But one thing I do want to highlight is that for the last 3 weeks, we've been roughly in the same area. We've had some really strong bullish candles. And so what we can see here is that the market is trying to battle. It is trying to turn around in this area. But a breakout to the downside below these could shift the momentum back into bear mode and then obviously start to head low, and the media and the sentiment will sort of get rallied up again, or riled up again is a better way of putting it. So if we could break out to the upside, we start to see a bit more optimism coming into that. So just keeping in mind that we have US midterm elections in about 24 days coming up very soon. So there is going to be the eyes are, kind of sets of eyes are going to be watching that with regards to the dollar and policies and so on and so forth. So there's definitely going to be some sensitivity towards that. And we've still got it sort of hovering around this sort of sitting above that sort of bullish momentum at the moment, still in an area where it can shift around. But I have to say, folks, it's looking weak. It's looking sort of 60-40 that it's likely to push lower and keep testing and moving for the lows. We can see here that Nasdaq actually started to create fresh lows this coming week. Tech stocks, obviously, if you go and have a look at the ones we will have a look at in a moment, they're not very strong. We could see that that's the case. So Russell 2000 also showing that exhaustion. So there's a lot of pressure here to the downside. And if if it starts to breach those levels, we're going to see it potentially. It's going to be it's going to appear to be scary, but price-wise, it might just move a certain distance relatively quickly. We'll have to see how that goes. If we look to the UK FTSE, it's also trying to stay above 6,700. Took a while to get us above 7,000. Trying to stay above that. Not looking so bad, but that doesn't mean the conditions can't change. And we can see here the DAX as well, also trying to break up above. So for the most part, it's just stayed in the same area, but definitely under pressure, not able to get that dollar going back, which is why you can see why this week it's a question of, okay, is the dollar going to bump its head up against this 113.50 again and get pushed back down, but we are still effectively range bound. Let's have a look at the Nikkei. Nikkei here is still holding its support, looking relatively bullish, but it is still range bound, so no clues there. And then the ASX out of Australia, same thing again, trying to form a bit of a double bottom here, but it doesn't really count until we start to breach above these highs. But that is what it is trying to do. Slightly more bullish MACD, but we have equal lows here. So this is hinting at it's stronger than it appears to be, and it's got a higher low here on the daily. But we need to really start breaking above that 7145 level. So that's interesting to me. We've got, and again, if other countries, non-US countries, are looking bullish and the US has a moment, it doesn't really matter. It'll just overwrite the other countries. So they're not always a clue, not necessarily, and I don't think in this case necessarily a clue, but non-US countries are looking a little bit stronger, but that doesn't, as I said, that doesn't really hold up if something happens in the US. So we've got, if we move on to the equities of interest, you can see we've got a level where Glencore's trying to break through to the upside. It's a bit of a mess here on that weekly chart, and you can see that exhaustion coming in here. So again, I think for me, it's going to be, are we going to break these highs or lows? And honestly, in many cases here, I'm leaning to the downside. But, we really could have some sort of a burst of optimism that could happen. I mean, for example, we could, I don't know, we could see some sort of a change in the Russia-Ukraine war situation to a better outcome for everybody, and therefore we could see some optimism come back and see it start to push back up. But there's just not a lot at the moment that I could see that's in the pipeline that could potentially change that. So we've also got a bearish setup here on Tesco that looks relatively like it wants to head a bit low. We've got American Express that gapped down and then closed a bit higher. It's still testing these lows. So you can see they're all just sitting on that edge. And there isn't anything that I could see in the news that's scheduled that the markets are waiting for. Last week was just a weird week. The markets are just waiting for something and they don't know what they're waiting for. So they're just obsessing about every bit of news and at the same time not really making any change, but we will get it will happen, and when it happens it'll do it. And then let's have a look. So Apple, same thing again, sitting near these lows. Again, if we see a move through that, we'll see it come back down just to the next level down. ARC Innovation under quite a bit of pressure, starting to breach new lows there. So again, we spoke about that last week. They looked as though they wanted to hit lower, and they still look as though there's potentially the case. So broadly speaking, I'm still sticking with the existing trends. So last week's analysis will carry over to this week unless something unexpected happens. But right now, based off the existing momentum, all of this looks pretty much the same. We could see the battle that is taking place where price is trying on a lot of charts is trying to stay above a level of support, and we can also see when we go to the rest that a few of them are starting to fall a bit lower and therefore they're under pressure. So for example, you have BP, which is interesting because BP has thrived on the energy crisis, obviously, but they're struggling. You can see that exhaustion in here, which to me obviously tells you that if it wasn't for, they should be thriving, right? So it's anyway, it's a bit of a concern. Exxon as well starting to push through, still above this level, but remember we're halfway through the month. We could close below that. It's struggling at those particular levels. We've got Coca-Cola. So Coca-Cola being, as I always mentioned, part of Berkshire Hathaway, it's coming back down through this level of support back into this range. And it's effectively free to keep hitting a bit lower, but again, they're still trying to stay above that level. We've got FedEx that has dripped below this level and just trying to hold. I think I spoke last week about it trying to, now it's going to come back up and test this level of resistance, and we'll see if we can get back over that line. We have General Motors. This is interesting to me, trying to produce a slightly higher low, but it did still breach the low of the previous week. That monthly candle's looking nice and bearish. You can just see how it's really trying to stay above that. And there's a reason why. Guys and girls, the reason it is trying to stay above this line is because if a lot of these start to breach these levels, they move into a different territory, which is more market panicky. It's very important. These are kind of like that last line in the sand before something very, we've had up until now, we've had a well-deserved market correction. So I'll come back to this, but let's go back to say the Nasdaq. We've had a very much needed market correction after a very, very strong bull market for, more than a decade. We need to have a bit of that correction, but now if we start to fall below that, then we start to go into, okay, we're not just having a correction, we're having, we're in this, we could be in this for a while. And so that's really what a lot of that's what a lot of the thinking is. And that's why that line in the sand is quite important. So we've got JP Morgan as well, trying to stay above that level. Let's go to Meta. Meta, of course, at this point in time, there's a few of these that are incredibly weak, which I expect them to continue to head lower, which includes ARC, for example. Morgan Stanley's doing okay, but you can see that strong bearish candle from last week. It's just going to head back down to these lows. It's had a good reaction at 71.60 before. It could potentially do that again. Have a bit of a bounce there. We've got Netflix, which is, as I said, is very weak, struggling to get back over the line. No sign of any change there. I don't expect much there. Nvidia starting to breach to these lows, which means it's now free to head a little bit lower there. We've got PayPal. that looks like it's very much en route back down towards its old lows. And I have to say at this time that if we do go into this territory, because again, Michael Burry and Ray Dalio, several others are talking about, the possibility that we're not through it yet, and we can, we have another leg down. What I find interesting about it is that a lot of these technology stocks, some of them are going to be at prices that that they either haven't been in since their first few years of operation, and sometimes some of them even lower than their opening price, their launch price, so IPO price. And so I find that fascinating. And so I'm curious as to whether any of you might think that that represents some really good longer term portfolio buying opportunities. I'm very curious about that. If you do, please mention some of your thoughts in that. Any charts you wanted me to look at or that are on your watch list for the purposes of that, please give me some feedback on that. I'm curious about it. So yeah, PayPal, let's have a look at SPDR. Also looking relatively bearish for the most part. All of these just seem to be just kind of slowly but surely trickling back down to either a level of support or just a continuation of where they're going. We've got Tesla. Tesla's already started to breach these lows. For now, it does appear as though it's just going to come back down towards 180 into this area. There is a bit of obviously no recent support here, so we started to breach these previous lows at 208, but it's got 200 in its immediate sort of sight, and then it starts to head down towards 180, which is the previous level. And then we've got the Vanguard S&P, which is very similar to a few of these. The only thing I would say of interest to me, this is observation, is in the past we tend to bounce off that 50-period moving average on the monthly. We tend to come back to that. Here we fell through that as a shock to the system, came back over it. But you can see this area still looking, and that's what I'm curious to see. Is this going to be the turning point? And it could be the case. We could find that we look back, a year from now, that was exactly the turning point. It's been the case. But that's all. I'm just going to keep that as an option. And so for that to be the case, we'd really have to stay where we are or close higher for that to become the case. Whereas as soon as we start to close below this 50-period moving average, the game starts to change. Then it becomes a thing. And it's going to become a thing. Let's have a look at bonds. You can see they're just going to continue to push lower. And for now, I don't really see any reason why that would change. Although you can see it's attempting to find some support here. I figure that the momentum is still bearish. The sentiment is still bearish. And therefore, they're just not getting any love. They're still going to continue to go low. But they've also got levels of support in recent history. And of course, we can assume from that it's fair to say that cryptos are going to have the same kind of pressure on them with that stronger dollar. You can see here Bitcoin had a really nice boost during the previous week, and it's trying to stay above a certain level, but it's under the same amounts of pressure, and therefore it's going to keep being pushed a little bit lower down. We've got Ethereum as well, setting up with a bit of a bearish setup here. So we've just got that level of, let's call it 1, 2, 6, 7, where that's starting to breach. And I think once we start to break these previous lows, we're going to come back down towards that if we're under that pressure. So it's fascinating to me that it isn't just with the dollar index. It isn't just with currencies. You can see it in commodities. You can see it in the indices. You can see it in individual equities. You can see it in the bonds, and you can see it in the cryptos, that there are recent levels the markets are either just breaching or trying to find support at. And therefore, we can see how clearly the money flow is happening between all the different asset classes. And here you can see as well significant that Cardano is starting to push below these levels of support and starting to go down. So I find, again, I can't help but wonder if if one is in a position and one is cash rich, that there could be some amazing there could be like a fire sale, as they kind of refer to it in the movies, a bit of a fire sale, and therefore there could be some good buying opportunities. You can see that pressure here. Definite bullish divergence creeping in here, which usually implies it, but for that really to follow through, we need to see a break above these highs. We need to see something happen, and this week has surely got to be the week for that, because we are all sitting on that cliff edge, and therefore kind of where else can we go? Either through that thing and start accelerating to the downside, or we can have a bit of find some support and start to push back up to the upside. So this week is going to be an interesting one. I'm not necessarily sure what the trigger is going to be. I've looked at the news. I can't really see anything up ahead. I know we have the US elections, but they're 3 weeks away, so not really sure what's going to cause it, unless the market's just going to go into a coma for a few weeks, which is just really weird. So maybe we'll see it push up and then find resistance and just stay range bound. So ladies and gents, just keep that in mind. I hope you found this interesting and useful and instructive. Don't be shy. Please give me some feedback in the comment section. And otherwise, have a great week. And and I'll see you in next week's video. Thank you very much.